head and shoulders as a topping pattern with a potential distribution. Although the earnings were quite okay, they beat the estimates in some of the sectors, we didn't see a rally. Well, for me, this is another indication that the market is really, really tired. So one of the most popular companies in the world, the hottest company in the world, one of the pillars of the United States stock market, it had very good results. And the most that it can do is a lower high, because until now, this looks like a lower high. So if we're going to see NVIDIA under this lows under 173, continuing under 170. And of course, if we lose 165, for me, that's going to be a big indication that most likely the whole market is going to top. And NVIDIA, it can be one of the things that can drag the whole market down because of the weight that it has in some of the global indexes. Another thing that I watched, and I know that Tesla looked good, still looks okay. I cannot say anything about it. However, today when I was preparing the AMA for you shifters, I found this rising wedge. It's tricky. Around 400, 405 area, it has a meeting with destiny. This was the area above which it broke out the last time, and it printed this top, and it also printed this top. So this starts to look like a double top. Plus, look how important it was from here. So since 2001, when we topped and we entered the bear market, 400 area was extremely, extremely important. And as you can see, so for example, here we broke above 400. We made an all-time high around 490. And after that, this transformed into a false break and into a distribution, and it dropped quite heavily, right? So it dropped 60%. It recovered all of that, but instead of producing conclusive, like confident highs, guess what? It printed a very equal top to the last top that we had in December 2024. So for now, it's in the risk of having a double top. And whenever we have this kind of double top, and also this can be distribution, the potential target for this wedge is huge. Yes, the potential target for this wedge is very, very big. This is this is part of the theory. I think we can safely measure it from. We can safely measure. Okay, it's not 350. No, not like that. Like 60%, and a 60% drop from here would take it around 163. This is the target. So this would be the potential projected target for this would be around 160 something area. And a lot of people say, oh, this cannot happen. Well, I don't know what to say, because a lot of people were saying in December 2024 that the stock market is looking good, etc., etc. And look how much Tesla dropped, 60%, right? So from the top is going to be 67%. So under 400 is going to be exactly 60% like it was the last time. It does not look good. And before I was reading Christie's comment, which was extremely valid and legit, I was telling you that I also see a potential distribution. And this is not the only stock that I see a distribution. We spoke about a lot of stocks that look distributive. I'm not going to put it with red right now because it's not confirmed distribution, but it looks distributive. NVIDIA looks distributive. Tesla looks distributive, right? So this is another chart on Tesla, but it's very similar. This is the last one that I worked on, and this looks like a double top. The fact that we couldn't produce like strong highs to invalidate the highs from December 2024 and we pulled back immediately, for me, it's extremely important. Now we are at the confluence of supports. So around 400, 405 area. Sorry, because we have the intersection from the upper downtrend line, from the lower uptrend line of this wedge, and with the yearly support from 400. A drop under 400 never produce good things. Look how much we dropped the last time. So if we're gonna lose 400, I would expect it to at least test the 300 area, and why not some extended targets if it's gonna come pressure from the indexes. On weekly looks okay. So it's not only a confluence of supports, it's a triple confluence. So it's not just confluence, it's a triple confluence of supports, because we also have the daily moving average, the smooth the daily moving average to 200. So we have triple confluence of supports around this level. Yearly support 400 area, trend line, and the 200 daily moving average, the smooth the 200 daily moving average. So here we have a triple confluence of supports. I think for me it's conclusive. I don't need to do anything else. I'm gonna wait for a break under this area. We just have Friday. I don't know if it's gonna happen tomorrow, but if we get the daily, weekly, monthly close, because tomorrow we're gonna have the daily, weekly, and the monthly close for this month, and we're gonna get it under 400, it can open a world of pain for the next month. Good. What other stocks are here? You see, everything happens for a reason. I want to give congratulations to someone and to tell him that I closed this trade too fast. Back in, I think it was September 2025, Bogdan, who is here, told me about the First Majestic Silver Corp and above $10. He told me about this very nice rounded bottom, which was forming since March 2022. We broke above it in September. I made the analysis, and the target for this was 55%, around 50, I think around 60%. I closed the trade completely. That was bad from my side, but I couldn't do it otherwise, and I didn't want to open the trade anymore. However, look at this beauty of a trade. It's up 200% just from when Bogdan signaled it to me. So I don't know. I hope Bogdan was much more careful with this one and he held it for longer. But hey, profit is profit. So this was one of the silver miners, and it does not look like it's stopping anytime soon. Is this all-time high? Yes, it's all-time high. So we are in a clear all-time high as we are speaking, and this monthly candle looks absolutely godly. You're so close to early. It's fine. It's fine. But I just wanted to give props to you. It was one of the best stocks that I had in the last quarter. It produced nice profit for me. I booked them. So beer is on me next time that we're going to meet. Adrian, this position on booking.com is also closed on minus. For me, it looks like this was a false break. I think Adrian used me as exit liquidity. For sure, he had some longs here, and when he saw Mr. Spread shorting, he counter traded me and he took my money. I'm kidding, Adrian. I'm kidding. Regardless, I think this was a very nice trade, and I'm still watching this. By the way, I still think that this false break to the upside and the forming of a high, low, lower, high, lower, low. I think we're gonna have anytime in the next weeks, months, another lower high here. Maybe even sooner. I don't know if we're gonna go there, but when we're gonna take out these lows, I'm gonna short it again. This is gonna be a stock that I'm gonna enjoy shorting, even without Mr. Adrian counter trading and taking my money. Okay, good. So I just wanted to mention this. So as you can see, I also lose trades and I also close trades with minus. What else? Let's go back to the Mag7. So we spoke about NVIDIA and the fact that it looks toppy. If NVIDIA drops 40% currently from here, see from today, right? So it's around, yeah, it's 40% in the upcoming weeks. Imagine what's going to happen to oil is dropping like a rock. Beautiful. See, no reason to wait. I'm telling you that level 66.62 or 66.66, 6666, right? It's a fantastic level. I just found it last 2 weeks when I first saw the rejection from it. It was to the cent, and I couldn't trade it then. But as you can see, it's still a nice level now. We're gonna go back to oil. So Nvidia looks toppy. Tesla looks toppy, especially if losing 400. Google for me already topped shifters. I told you about this. And I also made the, where is it? I think I have it here. Google. I told you that this already looks toppy. And one of the reasons why it looks toppy, it's because of this. So if Google also looks toppy, imagine the other stocks. It's for the first time, it's gonna drop. Don't you worry about the Google. Google has a lot of room to drop. It's for the first time since. That's why I made that post 1 week ago. Since here, when we are, of course, it's not going to be because this is a projection, but I think it's since February 2025, since the Kumo turned red, and once we're going to take out 300 area, so we're going to take out these lows. 270 comes fast, 250 after, and why not maybe close some of these gaps here to the downside, like 210. So you know what I told you for the last 2 weeks. Some things you cannot explain and it just comes with practice and it just comes with experience. But for the last 2 weeks, I have a gut feeling and I just have that unexplained spider sense feeling that the stock market has stopped. I'm not calling for, I'm not calling for recessions. I'm not calling for crashes. I have no idea when it's going to happen, but I see a technical correction in the market due to the fatigue of the US indexes. I see Dow Jones, even Dow Jones, which was still rallying due to the energy sector like ExxonMobil, etc. But I see S&P being tired and not being able to produce new highs for many months. Nasdaq is not producing new highs since October, so for a quarter and something, or quarter now, for the last 4 months. IWM, which is also rallying, cannot produce new highs for a full month. And now I'm seeing these leaders. So I'm looking at Google. Sorry, I'm looking at Google. I'm looking at Nvidia, I'm looking at Tesla and seeing the leaders of the market or a big chunk from Mag7 looking so tired and printing head and shoulders, printing massive rising wedges, plus this signal that I just got from Ichimoku. Look, we have been only in a clear uptrend. It's the first time since February 2025 when the Kumo turns red. So that's why I made that post. I'm gonna look to turn Google. I got stopped out on one of my position, but I'm gonna look to short Google again under 300 because I think that this looks like a distribution. And like I said, some of the levels that I'm watching are like 200 and 250, 255, and some of the lower levels to close those gaps that I said, like 210, maybe even lower. But even a 23% drop on Google, I'm going to be fine with it. I'm going to be a happy camper. I'm going to close that trade because I'm going to do it with full size. All in all, Tesla looks toppy, Nvidia looks toppy. I have to update the chart also here. Google looks toppy. Amazon. Amazon is the same type of tiredness that the whole stock market it has. It's also very well being represented in Amazon. So okay, in Feb, it's almost more than 1 year since Amazon had a clear high. Okay, I cannot count this as a clear high. This was a false break. I'm sorry. This was just a deviation above this range. Okay, this was a deviation to the downside. We all know what happened here. If you don't know what happened here, I'm going to tell you one more time. This was the Trump tariff drama tariffs, Trump tariffs drama, and it was a V-shaped recovery. So false break to the downside. Look how much we went to the upside, like 60%. However, I don't even care about this so much. I can even disregard it. So I can speak about this chunk here, and this looks very distributive. And the fact that since February 2025, we are not producing strong highs on Amazon. And again, this is not a strong high. This is just a false break or a deviation above this multi-monthly range, yearly range, if you want to consider it. I cannot consider this a strong all-time high or a new high, because if this was a strong high, after we had the pullback, the next impulse should have produced a new stronger high. So the next high should have been somewhere, not necessarily, but anywhere above this area, so somewhere around here, right? But what did the price tell us? It told us exactly the story that we're seeing unfolding right now and the thesis that I'm explaining to you. The fact that this high was just a deviation, right, above the range, and the next highs were lower and they were at almost exact, they were equal highs. So this was a deviation. The next highs were lower than that deviation, and these highs from here were equal highs with the last highs from January, February 2025. This for me screams absolutely fucking weakness. And once we're gonna lose 195, 200 area, just take it as an area, most likely we're also gonna see Amazon bleeding. So this is the fourth. One, two, three. This is the fourth company from the Mag7, which I see it shaky. Let's look at all the others. Apple, I think it's among the only ones which still stays strong. But even for Apple, I'm sorry for people who try to spin it, but also this looks like a distribution. So the more I look, the more charts I check, the more I'm convinced that sooner rather than later, we're going to have some sort of a correction in the market. Like I said, I'm not calling for crashes. I'm not calling for recessions. I'm just calling for a technical correction in the market, which can see these stocks dropping 30, 40%, which means S&P can drop between 10, 15, under 20%, which is a bear market. Also, Apple is not producing new highs since October last year, shifters. It's quite some time, look. So this was the last all-time. Okay, you can call this one the last all-time high because it was higher than this one, but I'm not so convinced. I would. This one I mean, this one had the chance to produce, but it was quickly retraced. Means that buyers were not so eager to buy and hold the position above 280. But since November, and it's already 3 months since we are not producing new highs also on Apple. Once Apple is going to lose 250, 255 area, for me, this is also cooked, and a potential 15 to 20% drop on Apple is very likely. And even if it's going to drop so much, it's going to be at very good levels to buy. By the way, when I'm saying that I'm waiting for a correction in the market, I'm going to gladly welcome that correction so I can long these stocks, so I can maybe buy some of these stocks for a longer term. I'm not seeing it as a panic. I'm seeing more as an opportunity because imagine if we get Nvidia from the highs, right? We get Nvidia at a 40% discount from the highs. That's huge. 40, 60% discount on Nvidia, it's absolutely massive. And if I'm thinking like this and I'm a small piece of sand globally, the money managers will really want to deploy their funds in Nvidia. Of course, if we don't have some panic. But even if we have some panic, after that panic recedes, you want to come back, and most likely the leaders are going to lead again. So Apple also looks distributive to me, or pre-distributive, under 255, 250 for me. That distribution is going to be confirmed short term. Correct. Also from Ichi. Not now. We're just going to wait more signals. Microsoft. This was from the tech sector. It was an absolute bloodbath. This was already dropping. This was already confirming some of the theories that I just explained to you a bit earlier. I think this got a very big hit also from the services sectors because it was a big bloodbath with the AI, etc. And I don't think I'm sorry that I missed this, but this was one of the cleanest double tops with the wicks that I've seen in a long while. So look at this double top. It was absolutely perfect. This was the neckline. And what more do you want? Look at this. Rising wedge, sharp drop. How much Microsoft dropped from the top? 30% from the top. Would I short it here? No. But I wouldn't buy it also. Since it's part of the Mag7 and some of the others didn't correct, I would just wait, and I think I would wait for a bounce either here and short it from there. Or if we lose 390 area. Some people say this can be a higher low. It can be a higher low, but we already had the distribution and we had another redistribution here with a rising wedge. So I'm less inclined to look for buying opportunity. We are under the moving average to 200. From all the Mag7, Microsoft looks the worst today, like the worst. Meta is okay-ish, but also toppy. You see, one of the reasons why I wanted to take a look at stocks and particularly at the Mag7 is because I wanted to show you shifters how important it is to study charts on a like weekly scale and see the clues that the market gives us on the weekly scale. For example, the same type of approach that I had, I think it was on Amazon. The same type of approach is also on Meta. Plus, all of them have the same type of behavior right now. They're not producing strong highs. So the last high, we had it here in February 2025. We had the pullback with the Trump tariffs, right? We had the recovery, but look how reluctant were buyers to buy above 755. We had the distribution, we had the pullback, and this was very important because this for me was distribution, break, retest, and continuation. From here, if this market wanted to go higher, or if buyers were interested, in buying this asset at these levels, they should have continued higher to take out the previous highs from here and show us that they're still engaged at these prices. They didn't do that. We had the break, retest, and continuation to the downside, and the same type of scenario on the next impulse. Even more clues we have here. So this is a high, this is a lower high, and this is a lower high. So all of the impulses after we had the distribution on Meta were showing us on weekly for many months that buyers are less and less active and less interested to buy at these levels. So lower high, lower high, lower high. I don't know how the next impulse is going to look, but as long as Meta stays under 755, this looks like a distribution, and this can be very well the next redistribution. And under what levels are here, like 600? Between 600 and 590, for me, this is a whole area. Once we're going to lose 590, I think we can open the lows from the tariffs. And again, look at this area. You can even ignore after this. You can look at this area. This looks like a distribution started since July last year. We don't have new highs. So with the exception of Apple, most of the stocks look either distributive, either they're like very, very toppy. Amazon, the same, looks like distributive. Apple is still about like very close to highs, but not producing new highs since November last year. This is the, not even talking about Microsoft, which just absolutely got destroyed. I wanted to show you that even the leaders in the market look very tired, and their charts look very not so they look very tired, they look very fatigued, and buyers are not reluctant, they're not interested in buying at these levels, they're rather reluctant, and exactly like I explained on Meta, high, low, lower. So high, lower high, lower high, until we don't have a clear close on Meta, for example, at above 755, and continue to take out the highs from 800 and continue higher. This will continue to look as a distribution. Confirmation for me is going to be, like I said, under 590, 600 area. Once we're going to lose this, we're going to open all these lows from here, and we're going to check some other levels afterwards. But for now, Mag7 look distributive. And this is the ETF of Mag7, which tells the story that I just explained for the shifters in the last 10 minutes. The Round Hill Magnificent 7 ETF looks distributive. Since October, we have no new highs, and actually have a high, lower high, lower high. We had the break, we had the retest, and if we get a continuation here, you can expect a lot of bleeding on the US stock market indexes. Hence the technical correction that I just mentioned to you, shifters. All in all, this is what I'm seeing in the stock market, and the question is going to come now, Mr. Spread, what can happen if Mag7 or if the US indexes will have a technical correction? Think about the Bitcoin right now as a leveraged NASDAQ. So if Mag7 is going to have a technical correction and we're going to see NVIDIA, Tesla, Google, Amazon, Apple, Microsoft, Meta dropping 10, 20, 50, 15, 30%, between, let's say, 15 and 30%, it means that S&P and NASDAQ can drop also 10, 15% technical correction, not bear market, not crashes, etc. Which means also Bitcoin can drop another from 70,000, where we are almost currently here, towards, or it can drop under 50,000. So can it happen? Yes, it can happen. But we shall live and we shall see. All I know is that if we have a breakdown from Mag7 and we see a correction on S&P, NASDAQ, Dow Jones, IWM, but S&P and NASDAQ are my benchmark for a Bitcoin, most likely we'll also see more bleeding on Bitcoin, which usually happens in a bear market.